Hello, everyone. I'm John Coleman here. I hope you all had a great bank holiday weekend. Yes, it's now the 8th of August. So, what has happened in the last month or so? Well, July is always relatively quiet. Now, unfortunately, a couple of the banks did increase their rates following on from the European Central Bank rate increase there over 6 weeks ago. And one went up by 0.5%, the other one went up by 0.25%. So, that's what happened on the rate side of things. Um, in terms of supply and demand, well, I'm still hearing stories of clients getting involved in bidding wars, which is crazy, but it's still happening. Um, the demand, the level of people looking to get themselves mortgage approved, has not gone down in one iota since the rate increases started at the back end of last year. So at some point, it will have to, in my opinion, but for the moment, it certainly isn't. What I want to bring to your attention now is a slightly more of a podcast that came my way and that I listened to there very recently. I thought it'd be worth sharing with everyone. It was the podcast is I've never come across it before, but a friend of mine brought it to my attention. It's called Diary of a CEO, but the guest here was a guy called Ramit Ye, an Indian investor. Now, the concept of what he was talking about resonated with me. It was more on the saving side of things, but I always have my mortgage hat on when listening to what he had to say. Um, Now, he talks about the compound rate of interest and how little savings over a longer period of time can have really great power. But that kind of works with the mortgage as well. I always say to people, the quicker you can pay your mortgage back off, the less total interest you will pay. This guy makes the argument, and it's something that it resonates with me, and I often say it to people. You're not buying a home as an investment. He actually makes the point much more eloquently than I could that buying a home as an investment actually may not be your best investment. But I would always say to people, you're buying a home as where you see yourself living, see yourself growing roots, your family for the next 10, 15, 20 years. So that's what buying a home is. An investment is you're looking for the best return on your money. So taking what he was talking about and relating it to the actual mortgage and relating it to having a home, um, the quicker you can pay back your mortgage, as I said earlier, the better. There's a great app called Carl's Mortgage Calculator, and if you just plug in the numbers, you will just see by same rate you owe, and just take 5 years off the actual mortgage, you will see the total difference in interest that you actually pay. Obviously, I'm here to help on that basis, and it's always a conversation we get into having at the point when you have found a home. Because at this moment in time, you could have the same conversation every single day around interest rates, and if you don't, you could have a different answer or a different recommendation. So, really, really important, but it's something I would always recommend that you would be thinking of in an overall concept. The quicker you can pay your mortgage back, the more cost effective it is. The guy in this podcast, which I will share again when I'm sending out this recording, he's just making the point of little amount from a very early age. The compound effect is really, really strong. So really recommend having a listen to that and then taking it into your thoughts when it comes to actually buying a home. Obviously, if you need some more detail on that for yourselves, drop me a mail. I'll be more than happy to oblige. So anyway, have a great August and hope to hear from you very soon. Thank you for listening.